Let's switch to currencies and central bank moves. And the US dollar rebounded on Wednesday against all but one of the other major currencies, with the pound losing the most after the larger than expected slowdown in UK inflation for November. For more, Peter McGuire, CEO of XM, joins us now. Peter, thank you so much for joining in this on this happy Friday before Christmas. And I can tell your Christmas tree is looking spectacular.
Thank you, Danielle, and all the best greetings for Christmas and, of course, the new year. And to Ausbiz and all the team, Merry Christmas.
Fantastic. Okay, so we've had a lot going on, haven't we? We've got the big PCE reading that's coming out Friday time in the US, but just give us a run through sort of the dynamics of what we've been seeing in the markets post that dovish commentary from Powell last week.
Well, exactly. I tell you what, it's been one-way traffic really for equities, and they've really bounced very strongly to the upside. I mean, when you're looking at where the Nasdaq is just on 15,000, you've got a 47.50 read just on for S&P 500 and 37.4 for Dow. So they've just been almighty for the last really, 7 or 8 weeks have been extraordinary. And look where the 10-year is. It's dumped 50 basis points this month, Danielle. So, it's dynamic. US dollars all over the shop, weakness pretty much, and that downdraft and everything else has just rallied very strongly.
Absolutely. So the market currently, what's it currently positioned for in terms of rate cuts from the Fed next year?
Wow, you throw your hand in the air and you say, do we get 3, do we get 4, do we get 5? When's the launch? Do you see that happening in May? Everyone seems to have an opinion, and that's just the presidents of each central bank or each bank. So, it just depends. I think we've got to get through the next couple of months and really see what happens as far as if there's no red flags that present themselves in the sense of geopolitics, what happens with oil prices if they maintain at this sort of level. If we were to see something escalate significantly with the Houthis and what's going on with the ships, then that could really impact as far as inflation and drive it back up. But at the short term, I've got to say, 24 is looking relatively okay, but that doesn't mean it's going to be okay.
Yeah, the market's currently looking for around a 90% probability or chance of a first quarter point decrease to be delivered by the Fed in March, and 150 basis points worth of rate cuts next year. And just looking at this performance, it although I think this is daily, is it?
Yes, it is.
Yeah, I mean, gold has been on a bit of a run. I mean, the chart basically tells us the story of a weakening US dollar and a stronger Aussie dollar, stronger, euro against the US dollar as well. It does seem to be setting the tone at the very least. That risk assets, as you said, for now are really popular. But of course, lots of question marks about 2024. So is it a case, Peter, we're kind of entering 2024 as we entered 2023? Nobody really knows what's going to happen.
No, well, that's exactly right. I mean, if you look over at what's transpired this year, Danielle, it's been dramatic. Yet there's been very little movement if you're looking at where the numbers are as far as the Nasdaq. Have a look, a lot of those markets have sat fairly still. The US dollar started at around just under 104 and now it's under 102. So it really hasn't moved much in the sense of that over a year. But when you're looking at that intraday, what's transpired has been dramatic. So we've seen big sell-offs, we've seen big moves, and I think the currency markets are going to continue to be very volatile leading into 24. We've got an election also running into November. So that's the first part. The second part is if those rates, and they do materialise, and we do see 150 basis points come out as far as US and what the Aussies do and other central banks, then that's all going to change the currency complex. And I think that that's going to boost gold. So that could be an exciting time there as well. So we've just got to sit on our hands and just see how it all plays out. But one thing it's going to be is certainly volatile and certainly exciting.
Absolutely. Let's have a look at Ethereum, because Bitcoin has been on a tear. And some people have been questioning whether or not we're going to see some of the alternative coins also rallying hard. I think we've got the Ethereum chart there. So just run us through what you've been seeing here, Peter.
Well, what I'm seeing in that 11-month window, or the start of the year, nearly 12 months, Danielle, is 100% move to the upside nearly. So that just shows you it's just dynamic. Started at 1189 or 1190, And there you are, you had a high of 23.60 or 23.59, currently sitting at 22.37. Bitcoin run from about 16,000 or roughly all the way through to nearly 44. So they're all on fire, and it's pretty hard not to have them in a portfolio, and certainly young people are all over it, and well, I think all ages in a lot of ways. So I think that cryptos should be 24 should be a dynamic year for those as well, those trading it.
Absolutely. Just really briefly, markets look like they've got quite a bit of momentum at the moment. Do you think that they're going to hold that through to the new year?
I wouldn't be surprised. 5,000 was a very bullish call by some traders and analysts to think the S&P might, crack it. It's at 47, just on 47.50, so you're halfway there from 4,500. I think 48.25 could be the sort of handle. I wouldn't be surprised to see them both, take a little bit further bid up. So, maybe 15.3 for the NASDAQ. So there's certainly some, I think, as you said, the momentum will stay. And I think it should be quite exciting to trade that over the next couple of days. It's certainly from a currency standpoint as well.
Yeah, actually, we might just get that chart up again because it was actually quite interesting. It was showing how much data that we've still got to come out over the next day or so. So there certainly are, within that context, quite a lot of potential market-moving events sitting in there.
Well, exactly. You've got also Japan inflation today, UK GDP data, and then you're looking at that from the States. So in Canada, retail sales, GDP final for the US. So on Q3. Look, there's a lot of big points, and that don't forget, that core PCE prices final. That'll hit the market. We're hoping around about that 2-3. It might surprise even further to the downside. So don't take your eye off the screen, Danielle.